Right guys, welcome back to another video, and today we're going to be going over a couple trade breakdowns from earlier of last month, which was highly requested in my DMs. So let's get straight into it. You're coming in at around 9:30 a.m. to pre-market to the macros. You're going to be analysing price because you don't want to be jumping on too early, because then price action hasn't presented itself enough for you to actually dictate a bias and see where price actually wants to go to. But around this time, you should see a purge on liquidity, such as buy side or sell side liquidity, and that'll be what's called your Judas swing. We're going to start on the daily time frame to dictate our daily bias. Still trading out of this daily bearish gap. Also just respected this daily bullish gap. Therefore, my daily bias for today would be bullish, because we're not inside of any daily bearish gap as of right now. We're trading out of a daily bullish gap. Therefore, I'd be wanting price to draw to this daily bearish gap again, and we have an unfilled daily bearish gap at 2206. What we can see here, we're trading out of a 4-hour bearish gap. So at the moment, we've got a bullish daily bias, and we've also got a 4-hour bearish bias. We're going to be having a bit more of a neutral bias, so we are lenient to go either way. So we'll have to see what price has to present coming into the macros. We're going to mark out our key levels of liquidity. Therefore, London highs, London lows, Asia highs, Asia lows, previous day high, previous day low, previous week high, previous week low, the New York opening price if that's available. Got all our key points of key draws and liquidity marked out here. So we're going to zoom into the 1 minute time frame and wait for price to come into macro. So as of right now, we are 5-6 minutes from macro, and we've just seen a manipulation higher to take out all points of liquidity. So we've got London highs, Asia highs, and this major point of buy side liquidity which was taken out. The 2:30 open, we've seen a massive push higher. So we're going to mark out the low of 2:30 as the New York opening price, as another point of a draw in liquidity to potentially target if we were to get a position for shorts. A short-term high being formed on NQ and ES. It's been swept, taken out, and now we're coming back lower, and preferably I want to see a displacement through this short-term low. And this is a really clean model that we're already seeing being formed prior to macro, and this is a perfect example of a Judas swing. We've had a purge in liquidity around 9:30 to take out buy side liquidity, and now we're seeing a position coming into macro to look for shorts. So let's see if we get a displacement lower or not. Bang, so right there we've just had a displacement lower inside of macro. So already this trade is already super algorithmic and playing out well, and we've respected so far every bearish confluence. If this trade was to work out, it has to respect every bearish confluence that comes in its way. We have this bearish gap right here, which was respected and moved lower. Vice versa for ES, it was respected and has now moved lower. And now what we can see here is we've had a clean, sharp displacement lower, and just like I said in the last video, we have a fair value gap, a 1 minute bearish gap that actually has context. And what I mean by context is, if you haven't watched the last video, is it's paired with a mitigation block or a breaker block. So it's paired with another confluence. So in this case, because we've taken out the previous short-term high and we've had a displacement lower, so in this case, because we haven't taken out the previous short-term high that displaced lower, this would become a breaker block and not a mitigation. Whereas in the last video, we had a mitigation because a short-term high was taken and then we had a displacement lower. But we've had, after this short-term high was swept, we've had 1-2 short-term highs, which neither were taken out. So this would become a breaker block. So we have a breaker paired with a 1 minute bearish gap, making this a high context fair value gap. We've got a fair value gap on both NQ and ES. For it to be an A+ setup, there has to be a fair value gap on both NQ and ES. Even just for a B+ setup, this has to be the different criteria that have to be met for it to be a clean setup. If there is no fair value gap on both NQ and ES, that means there's a low probable chance this trade's going to play out. Just off the top of this 1 minute gap, we're going to be entering in for shorts, targeting the New York opening price as that drawn liquidity, and we only risk max 30 handles, so we can risk to the top of this candle. So this is going for about a 1 to 3, 1 to 4. So let's see what we get. Right, so from this point onwards, we're going to be completely risk-free from this trade, because as you can see, we've taken out the first short-term low. Now this wasn't a short-term low at the point of when we were entering this trade, because we just entered off a tap off this gap. Once that candle had actually formed, then this became a valid short-term low. Then once we had taken it, then you'd be break even. So now what we can see is that getting to this point here, ES has actually already taken final objective. So at this point, you would fully close out of your trade for a 50 handle gain, because price is now valid to actually reverse, because ES has already taken final objective. Therefore, we have a bullish SMT. And we're also trading into a 5-minute bullish imbalance, making this a B plus setup. So you would actually take this with half position size, as it's not an A plus setup. If it's an A plus setup, you can take it with full. If it's B plus, you take it with half. In this case, we're trading into a 5-minute bullish gap, whilst ES has already taken final objective with bullish SMT. So you have two confluences going against your trade currently. So staying in this isn't the greatest idea. However, we can see that the trade actually ran all the way to final TP. But these are different scenarios you have to take into account, and you have to dictate a decision as the trader for if you want to stay in this position for any longer. So that is the first trade that you would have taken inside this macro. Now, what I'm about to show you here is that it is possible to get 2 setups inside one macro. This is why these macros are super high probability, because you will always find 1 to 2 setups a day at least, but they may not be the cleanest and they may not be the most highest probability. So that is where, again, your job as a trader is to make the right decisions and take the correct setups. We've had a manipulation higher to take out all key draws and buy side liquidity. So what we can now see here is that we've had a New York open price left. So we've marked that out as a key potential target for when we look for a position for shorts. Then what we can see here is we've had a short-term high that's been formed and got swept on both NQ and ES. So now what we're looking for is a displacement lower through that short-term low. So now let's see if we get a sharp displacement lower coming into macro. So now what we can see is we've had a sharp displacement lower. Through the most previous short-term low. We've got a 1-minute bearish gap left behind, paired with a breaker block, making this 1-minute bearish gap actually have context and high probable chance of working out. Because if you're just taking any old fair value gap, there's a low chance it's actually going to work out. You get hundreds and thousands of fair value gaps a day, but are you taking the ones which have the highest amount of context and probability? We're entering based off just a tap of this 1-minute bearish gap. So we've got a tap just there, risking maximum 30 handles at the high of this candle and targeting the New York opening price. But because we're trading into a 5-minute bullish gap, this trade would then become a B plus model, because there is a confluence going against the trade. An A plus setup is when there are no confluences going against your trade. We'll be break even at this first short-term low. So let's see how this trade plays out. So just like that, we would have smashed full TP. ES actually took final objective, so I would have closed out for around 50 handles. However, if you were just holding, you would have secured around 114 points. And as the trade moves on, it should respect every bearish confluence. So we can see this upper 1-minute bearish gap got respected, then the bearish gap on our entry got respected, then this little pullback of when price was mid-trade respected this upper 1-minute bearish and continued to move lower, taking out the New York opening price, and then we should see a reversal higher to potentially look for longs. For example, say you missed that trade, then we've had another sweep of liquidity such as the New York opening price, so you'd switch your bias to then look for longs. We've had a sweep of this short-term low which was taken on both NQ and ES. I want to see a displacement higher through this short-term high. Be patient and wait for price to move. So right there we can see we've had a sharp displacement higher with a 1-minute bullish gap left behind, and this 1-minute bullish gap is also paired with a bullish breaker, as we've not taken out the previous short-term low. So the previous short-term low in this case would have been right here, and we have this short-term low here which also hasn't been taken out. So therefore it is a bullish breaker and not mitigation. Just off a tap of this 1-minute bullish, there we have it, would have entered for longs. So what we can see is we're entering just off a tap of this 1-minute bullish gap, and if you actually look closely, we can see that the stop placement all the way to the short-term low is 36 handles. So you'd want to risk only to either the low of this candle, which would be just about 30 points, and you'd want an optimal entry of 0.5% of this fair value gap. Targeting just around 100 points on NQ. This is a 1 to 3, So that is completely valid, and you don't want to be getting too greedy trying to go for more on the trade. Going to be break even at this first short-term high. Let's see what we get. We've taken out this first short-term high here, so you wouldn't go to break even. However, you would trail your stop to the most previous short-term low. So when you're trading and you're going through the position, you want to trail your stop to the most two previous short-term lows or short-term highs, depending on if you're long or short. So let's see how the rest of this trade plays out. So right there, I'd now be break even, so completely risk-free in this trade. And there you have it, TP smashed, and you secured another 93 points, which is perfect. You're done for the day there, and you can get on with what other jobs or businesses you got to run for that day, doing other things, not just trading. You want to get off the charts, go do something else. Honestly, that is a clear example of just inside of that 30-minute window in the first AM macro from 9:45 to 10:15 New York local time, how even if you just missed the first move, there's always another trade that you can take. You just gotta have patience and not rush the setup, because if you start rushing trades, start rushing setups, that's when you're gonna start burning through capital, which you could be risking on higher probable setups. And that is how you're gonna start falling into a hole and start spiraling. It's gonna lose your confidence, etc. So it's really just being patient and waiting for the setup to come to you. And if it doesn't come to you, bro, just don't care. Literally don't care. You gotta put in your head that, like, if it's not gonna come, so be it. I'm gonna sit here and wait till I see what I want to see. And when you then take losses on those trades you're actually confident about, it actually doesn't hurt as much as it would as if you just took a dumb trade. I hope you guys have enjoyed that breakdown, and if you have any more suggestions of days that you want me to look at or things you want me to go over that you may have not understood inside this video, drop it down below in the comments. And if you do enjoy these breakdown videos, I'll be dropping more. And then coming into the new week, because obviously yesterday was NFP and today is bank holiday, we will be dropping the trade recaps from next week when we're actually taking setups, if any present themselves. So hope you guys have enjoyed, and I'll see you in the next one. Safe.